Welcome back to Golden Rule Radio, your precious metals update for the week. And we are going to talk about some charts this week and some things going on in the markets. Tori's not with us for the next few weeks. He's in Europe, so it's just Miles and me. How about that, Miles?
Yeah, well, the cat's away, the mice will play. Hold on to your seats. We're about to dive into gold.
Gold is seeing the pullback we were expecting because it ran into the headwind there at the 1300 level, the previous high being about 1295, pulling back to around 1220 now, and I think the 618 fib level we have on the charts is around 1200. Where do you think it's going from here, Miles?
Well, we're at a bit of a support level here just off the previous low. I think that 618, I'm a big fan of the 618 fib, so yes, we certainly could see it down there at the 1195 to 1205 range.
We're getting closer to the bottom range of that compressing pennant pattern, and so there is a big breakout coming.
And we're also starting to see a little bit of divergence on the downside with a dropping price and rising indicators. So I'd be very excited to see gold come down to that 1200 range, hit that compressing pennant with some divergence at a fib level. That's a lot of indicators all lining up at the same place.
Silver has followed gold down, and it is right around 16 right now, which I think is a psychological level. A little lower, we'll push it into the $15.75 range, $15.75, and that's the previous low that we're watching.
We did break below the bottom line of that compressing pennant we talked about, also including that manipulative dive last week in the price. That 1 minute dive in silver took out all those orders. So it doesn't surprise me at all that we broke below that price, and support becomes resistance.
We could look at platinum and palladium singularly, or we could look at them in relative value, and I would advise someone to look at the relative value of platinum palladium on a long-term basis, and right now it's showing platinum to be the buy. Miles has talked about this in previous shows in the last few weeks, and it's still there, platinum palladium ratio.
Anytime I see platinum coming down in price and palladium either following suit or going up, you want to be looking at adding to your platinum positions as aggressively as possible. The ratio opportunities are pretty unique in the precious metals market in the last 5 years. We've only had the one swing back when we were up at 5 or 6 to 1. So again, when you see these opportunities present themselves regardless of price, or even especially when prices are dropping, you definitely want to be taking advantage.
And the same applies with the gold-silver ratio right now, favoring to buy silver.
I'm a big fan of any time I can pick up free ounces.
Let's move to the other markets. The equities market is doing well. It's currently still in a bull market and moving higher, but anytime you have economic indicators pointing the opposite direction than asset prices, you should probably pay attention to it, because eventually the economic indicators that are out there, the alarm bells, if you will, as we were talking about last week, they are there. They're present, they're real, and those asset prices just continue to levitate. And I'm not sure when the next downturn comes, but Yellen, there will be another crisis, I promise.
So last week in the equities market, we talked about the divergence indicator.
We talked about how I liked it too.
We did talk about how you liked it. So this week, last week we only went back about 15 years. This week I'm going to go back a little bit further, and we're going to talk about PE ratios.
Price earnings.
That'd be
price divided by the earnings.
So looking at the price earnings ratio on the S&P 500, if we go back to the 1929 crash, leading into that crash, we had a PE ratio of around 19. The 1936 crash, a PE ratio was also around 19. The 1946 crash, PE ratio was 22. The 1972 crash, PE ratio was 18. In the 1987 crash, PE ratio was 20. And 2007-2008 PE ratio was actually only about 22, even though following the correction, we saw that PE ratio spike up over 100, I think around 120, 130 when it finally finished. So what's interesting here is every single major crash we've had over the last 100 years, the PE ratio has varied between 1819 to 2223.
With the high being 22, as I see on your sheet.
Yeah, in fact, the only time the PE ratio had ever exceeded, or the first time it had ever exceeded 25, wasn't even until 1997. And the first time PE ever hit 50 and above was 2008 after the 07-08 crash. So where's PE ratio today? 25. So leading into previous corrections, we've always seen the PE ratio up around the 19, 20, 21-ish mark. We're already 5 above that. So it doesn't surprise me at all when I look at the indicators on the charts, as well as I look at history, as well as we argue that the equities market is substantially overpriced at this point. This is why we're sitting on our horse and saying we think a severe correction is pending for a number of reasons. We'd also argue that a lot of the money coming into the equities market right now has to do with some of the crises taking place over in Europe. People do chase liquidity and they do chase stability. However, they're currently in paper assets. So as they're chasing stability, they're going to stay within the markets that they're used to. Well, what happens when the markets that you're used to collapse? Well, we saw that happen in 07, 08. We saw that happen in 87. We saw it happen in 72. We saw it happen in 46. People turn to the things that they know hold long-term permanent value, and that's why we like land, and that's why we like precious metals.
On this week's McIlvaney Weekly Commentary, Neil Howe, who is one of the authors of The Fourth Turning, he talks about almost exactly what you're talking about here in some detail, Miles. His book was required reading in our office a few years ago, and if you haven't read it, I think it was written in the late 90s. I want to say 97-ish, around the time where Miles was talking about that high PE ratio. It talks about generational cycles. So there will be a link here on this video, so you can click on that and go to the McIlvaney Weekly Commentary to listen to that interview. It's fantastic. One more comment about Neil Howe's book there. It was written in 97. So think about what he's writing about in 97, and here we are 20 years later, and things have come to fruition about what he's described. The dollar remains in this downward trend, and it popped back up to the 96.5 level, which was that fib level we've been talking about for weeks. But I don't know if that means a whole lot in this downward trend, because the dollar, I think, officially has turned bearish.
The dollar has turned bearish. Since November of last year, we're down about 8 points. I don't see any indicators here that says we're going to stop the fall anytime soon. I mean, the next major level we have on the charts is down around 92, 93. So I still think we have a ways to go in the dollar before we can say, yeah, on a year-to-year basis, we're definitely bearish, but certainly over the last 6 months, it's starting to look that way. And I don't see any reason for it to turn back up.
Yes, I agree with that. I've said in the last few weeks that you might see a little dollar rally in here, and still possible into the 98.5 range, but you're still in this huge downward channel, and it'll remain there for a while. I think we are going to see lower dollar prices. The euro kind of peaked there at the 1.14 relative to the dollar number, and it has pulled back, like we said last week.
Well, the euro's coming into levels set in 2015, end of 2015, May 2016. We're coming up to that just shy of 1.15 level again. So just like the dollar on the downside, the euro on the upside still has a little bit to go before we see some solid resistance support levels. Question then, of course, is what happens after that? Does the dollar continue down if it gets to 92? Does the euro continue up if it gets to 1.15? We'll just have to see.
Is it too early to mention Italeave?
Is that what they're calling the Italy Brexit?
Yes, Italeave.
Italeave.
You'll see that word come up more and more as Italy has trouble with the EU and breaking apart the EU even further.
At least Brexit rolled off the tongue. Italeave that's just who.
It sounds like a new that. It sounds like a new prescription drug.
What U.S. TV network named that? Italeave. Side effects of Italeave include baldness, blindness, sudden death.
Your currency going to zero. Italeave is not just Italy and leave. It's saying it will leave.
So what happens to the euro if Italy, which has really been the anchor of the euro, and I don't say that as a positive, not cornerstone anchor, but weighing you down anchor of the euro for the last number of years. What happens to the euro if that happens? I mean, from my perspective, all they've pretty much done in the euro is just continually ask Germany for more euros.
Well, Austria is not too happy about it because they moved troops to the border of their Austrian Italy. It's hard not to say Italeave now. Italy border. So Italy's not happy about that because they're having thousands, hundreds of thousands of migrants coming from North Africa coming into Italy. That's the route now. And the rest of Europe and Central Europe is going to try to push back against that, I think.
So currency turmoil, political turmoil, immigration issues. It sounds like Italy is sort of a microcosm of a worse America and the things that we're going through right now. So it may be actually worth paying attention to this one just to see how it plays out.
So we're recording a day after the 4th of July and hope you all had a great celebration of freedom. Hopefully we can keep that freedom. And we are looking at, in the next few weeks, coming into August already. I can't believe it. And August is the seasonal strong period for gold because Indians buy gold for the dowry because it's the Indian wedding season. So many of you probably know that already, but we just got through the 2 months, May and June, which are the seasonally weak months. I think the lowest. I think Tori mentioned that a couple weeks ago. But we're coming into the seasonal strong period for the metals. So with this pullback, it is an opportunity for you to add to your positions or create new ones.
So in honor of Tori and his vacation to Europe for the next couple weeks, this is Robert Miles thanking you guys again for stopping by Golden Rule Radio. If you liked what you heard, click the subscribe button below, give us a like, and check us out on Twitter at ICA Gold.
You can always call us for information. We'll gladly send a packet of information to you on an email or via snail mail.
Or if you'd like to chat with one of us here at ICA, you can give us a call at 800-525-9556. Thanks again for listening.
Have a great week.